For more on finance, we're joined by Rod North, Executive Director at Bourse Communications. Rod North, good morning.
Good morning.
Like many of the other economists, I'm sure you're tipping that interest rates will stay on hold today. When do you think that there'll be a drop?
Well, I think the issue is really looking at some of the data, that came out, yesterday, and some of the data we've had, over the last few months on retail sales and so forth. But yesterday in particular, where we saw TD Securities come out with some information on inflation data, that showed that inflation's contained around the 2.5% level. So that's in that band that the Reserve Bank is happy with, between sort of 2 and 3%. There was also some information that came out on job ads, the unofficial data. Now that actually showed a further decline of 1%, which is not great because the trend has been basically for the last 13 months we've seen that decline. So some of these things perhaps leave the door open for the Reserve Bank to move, and having a cash rate at 3% gives them that buffer. But I think probably what's going to happen is that the Reserve Bank will be waiting to see particularly what happens with the jobs numbers when they come out on Thursday, because there's some expectation that we could see the unemployment rate move back up a bit further, and it's been trending upwards because it was around the 5.1, 5.2 up to 5.4, with some expectation when those figures come out on Thursday could be 5.5. So that's not a good trend. So I think the Reserve Bank's got to weigh that up, as well as the key issue, which is the currency. I know other commentators have been saying, well, the Reserve Bank perhaps should leave rates on hold at this particular point, but at the end of the day, we can't have a currency continue to remain at this sort of level forever. It's really causing all sorts of grief, particularly with a lot of Australian manufacturers. Yeah.
Now, we had the Dow drop overnight. The FTSE was down as well. That should be a pretty bad day on the local market based on that. But it should only be a pause in what an increasing number of analysts are saying is a mini bull run at the moment.
Yes, well, I think when you look at that, and I mean, 100 points, the Dow's risen and got above 14,000, which is the highest level in 5 years, and our market as well has up 13%, and it's had a very, very good rise. And I mean, all that sort of indicating, really what's ahead. The share market usually gives you an indication of where things are sort of 6 months ahead. And I've been interested in watching particularly the ASX Limited share price, which for a long time has gone nowhere. But interestingly enough, just in the last month or two, it has risen from $29 up to $35. So we've seen a rise of 20%. So that's the ASX Limited itself. So it's expecting, I think, a lot more activity in the share market in the sort of months and years ahead. And I think when a market increases 20% or more, which is effectively what it's done, you can technically say perhaps we're in the beginning of another cyclical bull market, which of course is a very positive position. And we have seen a lot of money moving out of cash and fixed interest because rates are low back into the share market. So we could be in for a much better period ahead, and I think all the indications are there, and a lot of that will be very much measured by the company performances when we see the big results sort of start to come out into the corporate earnings season next week. And I think that will be an indication of where the market could end up over the next year or two, which I think will be a lot higher. And we're getting very close to getting back to that 5,000, and we normally celebrate that in here with a cake.
Let's hope. Okay. Pressure's on.
Sounds
Pressure's
good.
on.
Rod North, thank you.
Thanks very much.
Well, Australian cities are some of the most expensive